Good day, everyone. My name is Kun Bae, and I'm from the Research Department at Mirae Asset Securities Vietnam. Today, we'll be diving into the potential of TCB stock, Vietnam Technological and Commercial Joint Stock Bank. Techcom Bank was established in 1993. The bank's core businesses include mobilizing capital and crediting. In addition, Techcom Bank also engages in international banking services, trades foreign currency, financial investment, risk management, and capital protection. TCB has been listed and traded on Ho Chi Minh Stock Exchange since 2018. First, let's look at the corporate governance of Techcom Bank. Following Q2 updates, the bank's long-standing shareholders remain mostly unchanged, maintaining a notably concentrated ownership structure compared to peers. This tight ownership structure fuels debate on whether it adds value, with perspectives varying between large shareholders and retail investors. Tight ownership is argued to benefit the bank by creating a clear developmental path, demonstrating shareholder confidence, and syndication benefits both tangible and intangible. Despite risks like potential high lending exposure to major shareholders, increased regulatory oversight mitigates these concerns. New regulations capping ownership at 15% will prevent further acquisition if current large shareholders reduce their stakes, but immediate divestiture isn't mandated. The stability in ownership structure may reassure minority shareholders about the bank's growth prospects. Established in 1993 amidst economic reforms, Techcom Bank has evolved through Vietnam's financial transformation, leveraging customer focus to become one of Vietnam's top banks. Today, the bank serves 13.4 million retail and corporate customers with a robust network of branches and a commitment to pioneering digital financial solutions. With a mission to drive digital transformation in banking, Techcom Bank is determined to bring value to customers and shareholders while supporting sustainable progress for individuals and businesses alike. Techcom Bank's notable achievements include its founding in 1993, strategic partnership with HSBC in 2005, surpassing $1 billion in assets in 2006, and earning Vietnam's highest S&P rating in 2017. The bank's 2018 IPO was Southeast Asia's third largest at a valuation of $6.5 billion, equivalent to a trailing PBO of approximately 3 times. Further, Techcom Bank led in CASA ratio, reaching a high at 46.1% by 2020. And a year later, it posted over $1 billion in profit before tax. Now on to the key personnel. Mr. Ho Hung An has chaired Techcom Bank since 2008, bringing extensive executive experience, including with Masan. He has played an essential role in steering the bank through strategic growth phases. Dr. Wen Dang Quang, first vice chairman since 2016, brings more than 20 years of executive experience, previously holding critical roles at both Techcom Bank and Masan. Dr. Jens Lautner, appointing CEO in 2020, offers deep expertise in financial strategy and transformation, gained through senior roles at CM Commercial Bank and as a senior partner at McKinsey and Boston Consulting Group. He is expected to renew the momentum of banks for the term of 2021 to 25, particularly in digitalization initiatives. This leadership team combines a robust mix of local market understanding and international experience. This combined expertise, strategic foresight, and commitment to innovation are crucial in maintaining Techcom Bank's competitive edge and guiding its transformation into a leading digital banking institution in Vietnam. Techcom Bank subsidiaries, Techcom Securities and Techcom Capital, and Techcom Asset Management are instrumental in driving the bank's growth and innovation in Vietnam's wealth management and investment landscape. TCBS, a leader in wealth tech, specializes in corporate bond issuance and has developed TC Invest, a digital platform supporting investment and wealth management with nearly 1 million customers by the end of 2023. In the past 3 quarters, TCBS has experienced 80% profit growth and plans to increase its charter capital to 20 trillion VND to expand further into equity markets. TCC caters to long-term investors by managing open-ended funds across bond, equity, and mixed assets, recording 3 trillion VND in assets under management by fiscal year 2023. AMC, on the other hand, focuses on managing and resolving Techcom Bank's non-performing loans. Techcom Bank's growth is further bolstered by strategic partnerships with large real estate developers like Vin Group and Masterize, which drive the bank's strong real estate lending portfolio and attract high net worth customers through luxury property financing. As of December 31st, 2023, Techcombank serves over 13.4 million customers with around 1 million acquired through its WinLife ecosystem, which has a national network of 3,600 stores, contributing to the bank's customer base and diversification efforts into the FMCG sector. Now moving on to the financial highlights. Techcombank stands out among Vietnam's fastest growing banks, particularly following the local banking crisis in 2011-12. Since stabilizing operations and accelerating its path towards public listing in 2018, the bank has consistently maintained an average of 20% growth, elevating its credit portfolio to over 560 trillion VND in 2023, or 660 trillion VND by Q3 of 2024. In the past 3 quarters, while peer banks showed signs of deceleration, TCB's credit growth remained robust, positioning close to VP Bank as the 3rd largest private bank by market share. This growth is attributed to a high-quality client base with sound financial stability, supporting a positive medium-term outlook for credit growth. TCB's credit growth reached 17.5% year-to-date by Q3, almost doubling the industry average of 9%. This growth spans multiple banking segments, with investment banking as an exception, facing challenges due to investor caution around corporate bonds. Within its loan structure, retail banking regained a 0.8% plus share year-to-date, making up 40.2% of the portfolio. Compared to its peers, TCB does face higher concentration risks within its credit and loan mix. Nonetheless, the bank has successfully diversified somewhat its credit growth in the past 3 quarters, with recovering retail banking share. In contrast, other banks recorded increased concentration risks and declined retail banking proportion, highlighting TCB's resilience and prudent approach in a challenging market. Throughout the 3 quarters, Techcombank maintained financial stability with liquidity indicators largely stable except LDR. Its loan-to-deposit ratio nears the optimal cap of 80%, driven by a moderate deposit growth relative to robust loan expansion. Although capital adequacy ratio dipped from cash dividends, it rebounded, reaching 15.1% by Q3 of 24, second only to VP Bank, boosted by a controlled increase in risky assets. A high CAR, however, may constrain TCB's return on equity, as credit growth faces both regulatory and demand challenges, with the LDR almost fully leveraged. Techcombank maintained strong asset quality through Q3, with non-performing loan ratio rising modestly to 1.29%, reflecting the prudent lending practices and a resilient client base. The bank's loan loss coverage ratio exceeded 100% at 103.5%, indicating proactive risk management. While some peers have seen rising NPL ratios, TCB's portfolio remains well-positioned, particularly due to its high-income client base and financially stable corporate partners, which mitigates systemic risk from broader macroeconomic challenges. The CASA ratio at TCB was stable, reaching 36.5% by Q3 of 2024, or 40.5% when accounting for auto earnings deposits, an innovating product offering slightly lower rates than 1-month deposits. This CASA booster came with slightly elevated costs, which may put some pressure on TCB's net interest margin if the contribution from special CASA becomes much more dominant. With a focus on sustainable profitability, TCB's strategic asset allocation and CASA management illustrate its commitment to balancing growth and risk. Moving forward, TCB's approach to optimizing CASA and carefully managing net interest margin will play a critical role in navigating interest rate pressures while supporting robust lending activities. TCB's Q3 profits rebounded with a 28.9% year-on-year increase in total operating income, primarily from lending. Looking ahead, TCB's growth will be supported by its high CAR, enabling sustained credit expansion as regulatory credit quotas loosen. However, the bank may shift to syndicated credits or investments as LDR utilization nears its regulatory cap. Although the bancassurance partnership with Manulife ended, projected overall growth remains strong despite C's bancassurance contributions falling from its 2021 to 22 peak, with lending income, reduced credit expenses, and normalized costs set to drive profitability through fiscal year 2025. Finally, now on to the investment pitch. Bank's profit growth is expected to moderate to around 15% in the medium term, compared to the previous decade's impressive 40% range, which accompanied its recovery from the banking crisis a decade ago. This shift reflects a more sustainable pace given the bank's considerable size and broader economic impact. The SPV is likely to consider various factors when setting growth limits for leading private banks. Additionally, TCB's diversified portfolio strategy, which places less emphasis on real estate credit, yields lower spreads but offers greater safety, allowing the bank to maintain a moderate capital adequacy ratio, without necessarily keeping it excessively high unless regulatory demands increase, such as the stricter Basel III compliance. Consequently, we expect the bank to continue distributing cash dividends, and we adjusted the target price significantly upward to over 27,000 VND by Q2 of 2024. In recognition of TCB's evolving profit retention strategy, TCB's stock has been one of the top performers in the banking sector this year, reflecting not only robust earnings that meet expectations, but also strategic shifts such as the issuance for the cash dividends of first time in over a decade, aligning with investor preferences. The bank has also reduced its investment banking focus, particularly in corporate bonds, to lower concentration risks. Although the real estate sector's recovery has been slower than expected, TCB's developer clients remain financially stable, reassuring investors. Recent foreign inflows indicate further confidence as TCB's operational metrics have become more balanced with a controlled equity multiplier and a moderate ROE that appeals to fundamental investors. In summary, TCB's key investment highlights include its robust financial capacity surrounding sustainable credit growth, the development of a closed-loop ecosystem with significant potential, its innovation in new financial products, such as a pioneering cashback program, zero-fee services, and more recently, auto earnings, and its strong asset quality. However, downside risks include high concentration risk, which the bank is working to mitigate, and a relatively fair valuation in short term at a 1.2 to 1.3 PB ratio, which is slightly higher than that of peers' average. That concludes today's video. We look forward to bringing you more valuable insights in our next video. This is Conbei from the Research Department of Mirae Asset Securities Vietnam. Thank you for watching.